So imagine you've spent days or weeks crafting that perfect trading strategy and it backtests beautifully, but then you go live and the profits, well, they're just not there. Why? The answer? Fees. Yep, those tiny little numbers that you often neglect during your backtest, they're silently obliterating your edge, especially if you trade on low time frames like the 1 minute or 5 minute charts. Those juicy setups or patterns or indicators that you saw, turns out they only work in a world where fees do not exist. In this video, I'm going to reveal how fees are the invisible enemy of profitable trading, and I'll even show you what kind of strategies can survive even when applying fees. Okay, so let's assume you've done some chart analysis and you seem to have found a potentially promising pattern on 5-minute chart on Bitcoin. You notice that whenever you have a bullish divergence on the RSI followed by a green candle, if you had put your take profit at 0.2% from your entry and a stop loss at 0.2% as well, so you're basically aiming for a 1-to-1 ratio, and you do the opposite logic for a short, you search for a bearish divergence followed by a bearish candle, and you check all the instances where this pattern occurred recently, it seems to have worked way more times than it didn't. Actually, if we check every time this pattern occurred over the last 2 days, it happened 18 times. And out of those 18 times, it worked 13 times. So basically, this simple pattern over the last 2 days had a hit rate of around 72%. So that's quite high. And it would be enough to get some traders pretty excited about it and want to trade it live immediately. But the problem is, what looks like an actual 1-to-1 risk-to-reward ratio trade in hindsight, in the real world, with fees, it wouldn't be the case at all. If, for example, we assume a total round-trip cost, that means entry and exit, of 0.1%, like on certain crypto exchanges, that would mean instead of earning 0.2% when your TP is hit, you actually only make 0.1%. And conversely, when your stop loss is hit, instead of losing 0.2%, you have to add the fees on top of that. So you not only lose the 0.2% from the stop loss, you also lose the 0.1% from the fees. So in total, your losses amount to 0.3%. So we went from what looked like a 1-to-1 risk-to-reward ratio trade on the charts to an actual risk-to-reward ratio of only 0.33 in the real world. And even if the 72% hit ratio from this pattern is consistent over time, having such a hit rate with the real-world risk-to-reward ratio of only 0.33 over a large enough number of trades, that's clearly a losing strategy. So the pattern looked promising on the charts, but the reality of trading and the fees completely destroyed our potential edge. So if we have a setup that net of fees brings a reward to risk ratio of 0.33, we would need to make it have a hit rate of around 80% to now bring it back into profitable territory, which makes the task much harder. A strategy that looked like a money printer on the charts can actually bleed capital with every trade execution in the real world. So the misunderstanding of the cost of execution can be a real pain for a lot of traders, especially beginners, because the cost of doing trading does not appear on the charts. So unless you're aware of the actual cost that your broker or your exchange charges, what you will see on the chart will not be what you get in real life. So now let me show you two versions of the exact same strategy. Same assets, same time frame. The only difference will be one will have no fee and the other one will have actual fees. And for this strategy, we'll use a day trading approach with what looks like a standalone indicator that seems pretty promising. It's not very well known, but it's called the half trend. And as you can see, it's a momentum indicator or trend following indicator that seems to ride pretty well the up moves with quick reaction whenever the market is reversing. Sure, there are some false signals there and there, but overall it seems to capture pretty well the major upside moves and the major bearish moves. So I'm going to backtest it on OPSID using a 1-minute time frame. We'll do it on the Nasdaq 100, which is right here. And as you can see, I'm going to remove any type of fee whatsoever. So the strategy rules will be pretty simple. I'll say on a 1-minute chart, buy when the half trend goes from bearish to bullish. And I'll say short when it goes from bullish to bearish. Whoops. I'll also add close the trade when the half trend changes bias, and since this is a day trading strategy, we'll not want to hold positions overnight. So I'll just say close any open trade at the end of the day. We'll backtest that over the last 5 years. That will be enough. So there is no stop loss on this strategy. We'll let the half trend make us enter or close a position based on the half trend direction. So let's say we'll use 50%, or let's go 100% of our capital per trade, and we'll have only one trade at once, since the half trend can only be bearish or bullish. So these rules are clear enough. So I'm about to start the backtest. Let's go. And while it's cooking, if you like the content, feel free to smash the like button or subscribe. You can also subscribe to our newsletter. It's entirely free. You'll find the link in the description below, because this is typically the type of findings that we would share with you. Okay, the backtest is already over, so let's check out the results. All right, so as we can see, this is super nice. We have a very smooth and rising equity curve. The total return of the strategy is over 400% over the last 5 years, which is an annualized return of 38%, so way outperforming any index out there. We have a win rate of 40% with a risk to reward ratio of 1.77, so that clearly brings the strategy into profitable territory. So overall, very nice. If this was an actual legit strategy and track record, anybody would want to get into the action. And more importantly, this shows that on the 1 minute time frame, the half trend indicator by itself is capable of capturing moves and identifying the right direction more often than not, despite its false signals. Only using the half trend and going all in at every trade, as we can see, overall the half trend does a very good job. But here comes a twist. I'll now clone this strategy, but this time I'll add real-world fees. And for that, I'll use a typical spread or commission that we could see from a typical broker. So for example, here, this one here, the spread is 1 point. So I'll now re-backtest this strategy, this time adding fees. So a spread of 1 point on the Nasdaq is roughly like having a commission or spread of 0.0045%. So we'll just add that. And we'll start the same backtest, so same strategy, same rules, nothing changed except from the fact that we added fees. Here we go. Backtest ready, let's start it. Let me know in the comments section, how long did it take you before you realized the impact of fees on your trading? All right, and here is the harsh reality. As you can see, this was the exact same strategy. We have the exact same number of trades, but things look totally different now. That smooth and rising equity curve that we had before, gone. We now have this erratic, unusable strategy that will bring us almost nothing but give money to our broker. The annualized return totally crumbled. We went from something like 37% down to 1.5% only. And if we go into the performances tab right here, we can see that in total we paid 7,700 in fees. So of course our capital can never compound over time like it did in the first backtest, because all the money made from the edge of this indicator just goes out in fees. We actually paid more money in fees than our actual starting capital. And this is just proof that you might have found something tremendous on the chart, but the reality is that in trading, actual fees can totally ruin your edge. But you might be wondering, hey, if this standalone indicator has an edge on the 1 minute, why don't we use it on a higher time frame where fees won't have the same impact at all? And that's a great idea, so let's do that. I'll just clone the strategy again, and this time we'll use it, let's say, not on a 1 minute chart, but on a 1 hour chart, and we'll keep the same fees. Let's see if the edge is still there, hopefully. And here are the results. Good, not great. The edge might have still been there over the last 5 years on a 1 hour chart, but the total number of trades is way smaller, so way less statistically significant, which isn't good. We would need to test it on more assets or a larger backtesting period. But I'll let you do it. You can just go on opposite.com and get started. But don't lose hope. It is entirely possible for you to find an edge on a small time frame, despite the fact that there are fees, though it requires some work, sure. But as you can see here, I made another backtest while using even higher fees than in the previous backtest we made on the 5 minute time frame using the half trend strategy. And I went from a 1% annualized return all the way up to almost 16%. And all I did was I tried to improve the overall logic of the strategy by implementing some stop loss based on volatility and using some trade management rules in the overall logic of this strategy. And I haven't really spent much time on it, but I'm sure some of you can do much better. Alright, so in this video, we've explored how fees can sabotage potential promising strategies and standalone indicators. But fees are not the only reason why a strategy might be good in a backtest but fail in reality. There are other aspects at work here, such as a strategy only working in a specific environment, or over-optimizing a backtest for a certain period or asset, or even the fact that when you go live, you have poor execution, latency, execution lag, or even like hesitation if you manually try to execute your trades. All of these can make a strategy that seemed promising in a backtest perform poorly in reality. And this is why strategies need a robustness test. But more on that in a future video. In the meantime, if you like this one, please smash the like button and subscribe. As for me, I'll see you in the next one.